I'm starting to think I should have saved the roller coaster thumbnail from yesterday for today because we are pumping hard. Let's get into it. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. So today started out with mostly sideways momentum, right? A lot of ups and downs, sure, but generally it was going sideways until this pump happened. And I started noticing this across all my stocks. I was getting alerts like crazy. I finally stumbled across this. It turns out Trump announced a 90-day pause for tariffs. And most people read that far and stopped because that was the headline being passed around. But there's some fine print here. Look on the screen. There's actually still a 10% tariff on all the countries that are being paused. The pause was on anything above 10% for this 90-day period while they negotiate another trade deal. So, number one, the tariffs were not eliminated, and number two, it was a pause, not a full cancellation of tariffs. So, most likely, we're still going to see a 10% tariff on everything that is imported, period. But they also announced that China is going to have another additional tariff again that is going to bring it up past 100% to 125%. So for those of us who like to do high-yield dividend investing, we should note that XDTE, while it did do some recovering, it did pump. That top wick is a lot longer than it looks on some of the other QQQ ETFs. Let's go ahead and look at QYLD. QYLD pumped and pretty much stayed high. The recovery was much higher here than it was with XDTE. I'm not really sure if that's just a trader issue or if that's maybe they set the wrong contracts. I don't know. But we know that there is definitely a huge difference between this and this when it comes to recovery. So this is one of those times, even though I made that video a couple years ago saying QLD isn't all that great, it seems to be doing okay at this moment in terms of being able to recover somewhat with the market. Now let's compare that to a traditional just QQQ run-of-the-mill NASDAQ ETF. This also pumped very high, as you can see, with a very small top wick. Now, we're not at after hours just yet, so this could go either way between now and when I post this video, but this is a good chance to assess which ETFs do recover, which ETFs, when the underlying stock or ETF goes up, do these also go up? It's also important to note Bitcoin is also pumping as well, reclaiming the $80,000 mark, going as high as 82.4 right now as I'm recording this video. Now, a good way to see if it's the entire market or just certain stocks or certain ETFs is looking at the VIX. This is the volatility index. VIX, just regular VIX, is just kind of the all-encompassing volatility number. There's different ones like VIXE, which is short, and VIXM, which is more midterm. But I just like to, if I'm talking about it, I like to just go with just the normal VIX. The VIX went down to 32.15 as of the recording of this video. Now, remember, the high a couple of days ago was 60.13 VIX. Now, that doesn't mean a whole lot to the average investor. Generally, 60 is considered very high. Look at the rest of this graph here. The only times it goes up over 60 is when there's something to be afraid of. Like this one, 65.73. That was back in August when we had that low in the market. And just to give you a comparison, this is March of 2020 with a high of 85.47. So just to give you a comparison, 85 versus 60. So that's pretty close to the amount of volatility we had in COVID. Now for the most important question, how can you as the investor capitalize on what is going to occur? We know that at some point there's going to be a top. A lot of this pump today was just on the headline of tariffs paused for 90 days. A lot of folks didn't read into the idea that there's still tariffs in effect, just very small ones, and that likely there's going to be something above 10% for some of these countries. So, at some point, there is likely, not guaranteed, but likely to be a top and then a slight or harsh correction depending on the outcome of the negotiations. So you could use options as a way to short. You can pick your strike, you can pick your expiration. You may want to go a little bit further ahead to make sure that you can happen to catch whenever this news finally hits. Remember, the pause is for 90 days, so you might want to go above 90 days. I'm using QYLD as an example. You could pick whatever ETF or stock you think might be better for you and your needs. But once you pick your expiration, you can pick your strike. You could decide that you can go with an in-the-money put and buy it when you're near the top. That way, it will cost you a bit less. And then as it goes further and deeper into the money, it will increase in value, as you can see here. As you can see here, those prices are going up the further in the money you go. So if you can buy it when it's closer to being at the money and then it goes deeper, you've made money just on the put contract itself if you decide to sell the contract. Now, if you happen to have blocks of 100 shares of whatever ETF or other stock that you happen to be using for this strategy for, you could just decide to sell your shares if the strike price is above your cost basis. But regardless, you still have options on the table, and there is always an opportunity in the market, whether the market is going up or down. So let us know in the comments, which strategy do you plan to employ during this time, or do you even think there's going to be a correction at all? Tell us in the comment section down below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.